looking at those US jobs numbers coming in worse than expected, really sending the dollar into some sort of tailspin as well as global markets. What were your thoughts on those numbers?
Good morning. Well, I think it's fair to say that the numbers were quite a bad surprise. I think the market was disappointed all around. I mean, non-farm payrolls did miss estimates by quite a large number, and there are reports that, you know, the current pace of job creation in the States doesn't even keep pace with population growth at this stage. So quite a serious problem that we're seeing developing over there. And of course, that then feeds into concerns over global growth. I mean, you know, with Europe in the situation that it finds itself in, growth having ground to a halt there, the natural question is where, you know, impetus in the global economy is going to come from, and it's increasingly clear that it's certainly not going to be the US, increasingly clear that China has its own troubles as well. So certainly, you know, the non-farm payrolls data on Friday really gave rise to a whole new set of concerns over the direction of the global economy.
A whole new set of concerns coming through with a lot of rumors that QE3 could be coming into effect. Your thoughts on that? Were the numbers that back to warrant QE coming through?
Well, you know, there's no, the numbers certainly were very bad. As for whether that loan number would be enough to tip the Fed scale towards more quantitative easing, I think is maybe taking it a step too far. Having said that, you know, the Fed has been seen to be going back and forth a little bit on this issue, and expectations of QE3 do tend to wax and wane in line with the data. So it's not surprising that the market is now starting to speculate about the possibility of QE3 on the back of these very bad numbers. But I would still say that perhaps we'd need to see a little bit more disappointing data out of the States to really tip the scale, you know, immeasurably in favor of further quantitative easing.
We have the ECB meeting later on this week. Would be quite pivotal for global markets given what's happening in Spain and Greece at this stage. What are your expectations on that front?
Well, we've argued for quite some time that we still think that the ECB has room to ease on monetary policy, that we still see them taking down the refi rate this year. So I think it might be, you know, a little bit too early to expect that to happen at this meeting. But certainly we do expect to see them moving in this direction, and perhaps already starting to give markets a signal that they're starting to move in the direction of also affording greater liquidity to the market.
Let's touch on the rand a bit. We saw it hit a three-year low on Friday, but coming back quite a bit this morning. What are your thoughts on the type of trade we are seeing on the rand? And would you say that we are a bit of a risk-off currency or risk-on currency at this stage?
Well, I think it's fair to say that, you know, the rand is playing true to form at the moment and remaining quite volatile, and that of course is a reflection of great market uncertainty. So it's certainly not surprising, I would imagine, for people who are familiar with the rand market to see these kinds of swings and roundabouts in the currency. As we've maintained, we do still see a weakening bias in the currency, and that is probably likely to persist as long as this uncertainty persists. And I think the first key event is going to be that 17 June election in Greece. That should give some greater clarity over the direction of the Eurozone, and things could settle down to a large extent after that. But in the meantime, I do still think that the bias in the rand will remain towards greater weakness, and I do think that, you know, market participants would have to be braced for greater volatility in the run-up to those elections.
Greater volatility to come through for the rand. At what range are you seeing it trade at today?
Well, we have quite a wide range expected for the rand, and that was obviously based on the wild swings that we've seen more recently. As I mentioned, we do see the bias remaining towards greater weakness. So at this point, the question really is, you know, if the rand continues to weaken, there's some resistance at the 875 level. If it goes through that, however, then we could be looking at 888. If the rand does manage to recover some lost ground today, it could possibly then start to strengthen, and then we'd possibly be looking to see whether it can make and sustain a break below the 852 level, and then that would open the door towards the late 840s. However, it is difficult to see in the current environment what would drive the rand towards, you know, the lower range that I've just mentioned now.
Nomvuyo, let's touch on some of the data that's expected out this week. We have vehicle sales, and then we also have manufacturing numbers expected later on this week. We did have the Purchasing Managers Index edging lower to about 53.6 in May last week. Your thoughts on the type of numbers we could see coming through for vehicle sales as well as manufacturing?
Well, as far as vehicle sales is concerned, we're seeing that there might still be some strength in the numbers in May. Came in about 10.5% year-on-year in April, and that number, of course, would have been affected by some public holidays that occurred in the month. So we're expecting to see a slight bounce in the numbers for May, but going forward, we're expecting to see a moderation in retail sales growth. Don't think that these numbers can be sustained in the face of what appears to be a much sharper than expected slowdown in Europe and China and the US. And I think the same goes for the manufacturing sector. Although we're expecting a slightly more modest contraction in the numbers for April, the manufacturing sector does remain under pressure for much the same reasons as I mentioned, that the vehicle sector would remain under pressure and largely linked to the slowdown that we're seeing in the global economy. So we're expecting to see another contraction in manufacturing production for April, although possibly slightly milder than the near 3% that we saw in March.